Hello and welcome to our news video. Subscribe to our channel and share your comments so that you don't miss any important news. The Cryptocurrency News EN channel does not recommend any offers to buy, sell, invest, etc. in the cryptocurrency market in any way, and any losses and other consequences are your responsibility. Our channel only follows the news of the cryptocurrency market and does not provide you with any advice on making transactions. Please enter into transactions in the market with your own analysis. Solana versus Ethereum, the battle for blockchain dominance in 2025. BibitHack exposes major security gaps in centralized crypto exchanges. Is the industry prepared? US crypto index ETFs struggle to gain traction. Will investor interest pick up? SEC closes investigation into OpenSea. What does this mean for the NFT market? Ethereum price drops amid BibitHack and hard fork speculation. Could ETH fall to $1,950? Solana versus Ethereum, the battle for blockchain dominance in 2025. The competition between Solana, SOL, and Ethereum, ETH, is heating up as both blockchains vie for market share, user adoption, and institutional investment. Solana is gaining attention with its faster transaction speeds and lower fees, while Ethereum remains the dominant force in decentralized finance, DeFi, and smart contract development. As Ethereum's price struggles to regain its all-time highs and Solana's momentum accelerates, especially with growing user activity and the potential for ETF approval, the big question is, which blockchain will dominate in 2025? Ethereum's struggle, is the bottom in sight for ETH? Despite Ethereum's stronghold in the blockchain space, its price performance in 2024 has been underwhelming. ETH has only gained 65% in 2024, compared to Solana's 95% rally. Currently, Ethereum, ETH, is down 33% from its cycle high of $4,116. Analysts speculate that Ethereum may have hit a local bottom at $2,156, as indicated by technical indicators like the Relative Strength Index, RSI. According to crypto analyst Income Sharks, this dip might signal the beginning of a price reversal. Everyone is afraid to call that wick a bottom, but it is. The largest volume candle and liquidation event are even more confirmation. Additionally, the whale accumulation of ETH has been steadily increasing, with large addresses consistently adding to their holdings. If Ethereum's historical patterns hold, ETH could be poised for a strong rally in 2025. Solana's price momentum, a parallel to Ethereum's early growth. Solana's robust price action has sparked comparisons to Ethereum's early growth phase. Crypto trader Immortal points out the striking similarities between Sol's price movement in 2025 and ETH's meteoric rise in 2021. In early 2021, a lot of people were trying to guess the top on ETH. But despite all odds, we continue to make higher lows. It reminds me of SOL this year. With Ethereum's market cap nearly 3 times larger than Solana's, some analysts predict that Solana's price could push beyond $500 in the next major rally. Utility versus price, which blockchain offers more real value? Beyond price speculation, a blockchain's true value lies in its ecosystem, including DApp activity, transaction volume, and DeFi adoption. Solana has outperformed Ethereum in daily transactions, active addresses, and decentralized exchange (DEX) volume. While Ethereum still leads in total value locked, TVL, Solana's growing DeFi ecosystem is rapidly catching up. However, critics argue that Solana's memecoin craze has artificially inflated its activity metrics. Income Sharks cautions. People say SOL is fast and cheap, yet they lose 99% of their position on a useless meme coin that rugs. There's nothing unique being built on SOL other than more casinos. Ethereum's Layer 2, L2, upgrades, aimed at addressing high fees and network congestion, are expected to improve scalability in 2025. Key developments, like Polygon's Aglayer and Uniswap's across protocol, could make Ethereum more competitive. Institutional investment, the race for ETF approval. Institutional adoption will play a crucial role in the long-term growth of blockchain networks. Ethereum secured spot ETF approval in July 2024, and while initial outflows from Grayscale's ETH fund were high, net inflows have since surged to $3.18 billion. For Solana, ETF approval could serve as a game-changing catalyst. Bloomberg analyst James Seifert has raised the likelihood of Solana ETF approval to 70% in 2025. However, Messari analysts believe that even with an ETF, Ethereum is more likely to attract institutional capital than Solana. Which blockchain will lead in 2025, Ethereum or Solana? Bybit hack exposes major security gaps in centralized crypto exchanges. Is the industry prepared? The Bybit hack has shaken the cryptocurrency world, becoming what is now considered the largest hack in crypto history. More than $1.4 billion in liquid staked Ether, STETH, mantle staked ETH, METH, and other ERC-20 tokens were stolen. This attack has raised significant concerns about the security of centralized crypto exchanges, CEXers, and their vulnerability to increasingly sophisticated cyber threats. How did the Bybit hack happen? Blockchain security firms, including Arkham Intelligence and renowned on-chain analyst ZachXBT, have traced the attack to Lazarus Group, a North Korean-backed hacker organization. Experts believe the hackers used a blind signing exploit, tricking key holders into approving a malicious smart contract that transferred control of a cold wallet to the attackers. Lucien Borden, an analyst at Trezor, stated, "This incident is another stark reminder that even the strongest security measures can be undone by human error." May Dolev, CTO of Cyvers, compared the Bybit hack to the $230 million WazeX breach and the $58 million Radiant Capital exploit. He explained that the Ethereum multisig cold wallet was compromised through deceptive transactions. The breach occurred when signers unknowingly approved a change in the smart contract logic, giving hackers complete control over Bybit's cold wallet assets. Bybit's response and industry reactions. Following the attack, Bybit's CEO Benju reassured users that the exchange remains financially solvent and is fully capable of covering all losses. He stated, "Bybit remains solvent, even if this hack loss is not recovered. All of the client's assets are 1:1 backed, we can cover the loss." Bybit has also engaged blockchain security firms and ethical hackers to help track the stolen funds. Arkham has launched a bounty program, offering 50,000 ARKM tokens, valued at around $31,500, to anyone who can identify those responsible for the hack. Despite Bybit's assurances, the hack has sparked broader concerns about the security flaws in centralized exchanges and whether existing security measures are sufficient to prevent future incidents. Can off-chain validation prevent future crypto hacks? The Bybit breach has reignited discussions about the security of centralized exchanges and whether decentralized solutions or new security technologies can help prevent future exploits. According to Michael Pearl, VP of GTM strategy at Cyvers, one potential game-changing solution could be off-chain transaction validation. An emerging solution, known as off-chain transaction validation, could prevent 99% of all crypto hacks and scams by preemptively simulating and validating blockchain transactions in an off-chain environment. This approach would allow transactions to be analyzed before execution, making it possible to detect fraudulent activity and prevent unauthorized transfers before they happen on-chain. What's next for crypto exchange security? With the Bybit hack surpassing $1.4 billion in losses, nearly half of the total $2.3 billion stolen in crypto-related hacks in 2024, the key question is: will centralized exchanges take the necessary steps to strengthen their security, or will investors increasingly shift towards decentralized and self-custodial solutions? U.S. crypto index ETFs struggle to gain traction. Will investor interest pick up? Newly launched crypto index exchange-traded funds, ETFs, designed to offer diversified exposure to Bitcoin, BTC, and Ether, ETH, have had a slow start in their initial days of trading. Despite the growing demand for cryptocurrency investment vehicles, these multi-asset ETFs have failed to attract significant capital inflows. Lukewarm reception for new crypto ETFs. According to Cointelegraph data, Franklin Templeton's crypto index ETF, EZPZ, which debuted on February 20, has only garnered $2.5 million in net assets. Meanwhile, Hashdex's Nasdaq Crypto Index US ETF, NCIQ, which launched on February 14, has seen just over $1 million in inflows. When compared to spot Bitcoin ETFs, these figures appear underwhelming. Franklin Templeton's spot Bitcoin ETF, EZBC, which launched in January 2024, attracted $50 million on its first day, while Bitwise Bitcoin ETF, BITB, saw nearly $240 million in opening day inflows. Even spot Ethereum ETFs, which received a lukewarm reception from investors, managed to secure $100 million in net inflows on their first trading day in July 2024. A stark contrast to the current performance of crypto index ETFs. Why are investors hesitant? Several factors could explain the lack of enthusiasm for these new crypto ETFs. 1. Limited diversification. Both funds only hold Bitcoin and Ether, tracking indexes weighted by market capitalization. While they aim to expand their holdings to include other crypto assets, regulatory restrictions currently prevent them from doing so. In contrast, investors seeking pure Bitcoin exposure still seem to prefer single-asset BTC ETFs. 2. Competition from more established crypto ETFs. Spot Bitcoin ETFs have been a game-changer, attracting billions of dollars in capital. Ethereum ETFs have also begun to gain traction, albeit at a slower pace. Investors may see little reason to opt for a blended ETF when they can invest directly in BTC or ETH ETFs. 3. Regulatory uncertainty. The U.S. Securities and Exchange Commission, SEC, has yet to approve ETFs that hold other cryptocurrencies, such as Solana, SOL, or XRP. NYSE Arca has already filed for a grayscale digital large-cap fund ETF, which includes Bitcoin, Ether, Solana, and XRP, but it remains unapproved. Without additional crypto assets in the index, investors may see limited benefits in these funds. The future of crypto index ETFs. Despite their slow start, analysts believe that crypto index ETFs could gain momentum if regulators approve funds holding a broader range of cryptocurrencies. Institutional interest grows in diversified crypto portfolios. Investors seek exposure beyond Bitcoin and Ethereum. With the SEC reviewing multiple ETF applications, the expansion of crypto index ETFs may still be on the horizon. Will regulatory approvals pave the way for wider adoption of diversified crypto ETFs, or will investors continue favoring single-asset Bitcoin and Ethereum funds? SEC closes investigation into OpenSea. What does this mean for the NFT market? In a major regulatory win for the non-fungible token (NFT) industry, the United States Securities and Exchange Commission (SEC) has officially dropped its investigation into OpenSea, one of the largest NFT marketplaces in the world. This decision, which comes just days after the SEC dropped its lawsuit against Coinbase, is seen as a positive shift in the regulatory landscape for crypto and NFT markets. SEC ends probe into OpenSea, a victory for the NFT space. OpenSea co-founder Devin Finzer confirmed the news in a February 21 post on X, formerly Twitter, stating, "The SEC is closing its investigation into OpenSea. This is a win for everyone who is creating and building in our space." The SEC had been investigating OpenSea since August 2024, after issuing a Wells notice alleging that the NFT platform had facilitated the sale of unregistered securities. Many in the crypto and NFT industries feared that if the SEC classified NFTs as securities, it could severely impact the sector, leading to stricter regulations and potential legal risks for NFT creators, collectors, and marketplaces. Coinbase lawsuit dropped, a sign of regulatory softening? The SEC's decision to end its case against OpenSea comes just hours after it agreed to dismiss its lawsuit against Coinbase, which was accused of operating as an unregistered securities broker. These moves signal that the SEC may be softening its stance on crypto-related businesses, especially under the backdrop of increased political pressure and growing institutional adoption of digital assets. Finzer emphasized that classifying NFTs as securities would have been detrimental to innovation, potentially crippling the NFT ecosystem. Industry leaders celebrate the decision. The broader NFT and crypto communities have welcomed the SEC's decision, seeing it as a crucial step forward for regulatory clarity. Magic Eden's chief business officer, Chris Akavan, praised the outcome, despite Magic Eden being a direct competitor to OpenSea. "While we are competitors in the trenches, we share a deep belief in NFTs and what they will enable. Happy to see such a win for the space." Pseudonymous crypto commentator Beanie told their 223,800 followers on X that this could be a catalyst for the next NFT bull run, stating, "OpenSea did a wonderful thing for the NFT industry by facilitating some regulatory clarity. I'm sure it has come at great cost as well. So we should all be thankful for that." What's next for OpenSea? With the regulatory cloud lifted, OpenSea is expected to continue expanding its ecosystem and introducing new innovations. Just days before the SEC dropped the case, the OpenSea Foundation announced plans for a project token called SEA. The token's launch date remains undisclosed, but it is expected to be available in multiple regions, including the US. OpenSea has also been adjusting its airdrop reward system, after user backlash over concerns that it promoted wash trading and prioritized fee collection over creator incentives. The bigger picture: are NFTs poised for a comeback? With regulatory concerns easing, could this signal a revival of NFT market activity? Despite the broader crypto downturn, NFT projects, marketplaces, and institutional players continue to innovate. Could this SEC decision spark a renewed wave of confidence in NFTs, leading to a new bull run in digital collectibles and tokenized assets? Ethereum price drops amid Bybit hack and hard fork speculation. Could ETH fall to $1,950? Ethereum's price has taken a sharp downturn, sliding over 5% in 24 hours to hover around $2,700 on February 22. Several key factors have contributed to this sudden decline, including the $1.5 billion Bybit hack, increasing hard fork rumors, and a bearish continuation pattern forming on ETH's charts. Bybit hack sparks selling pressure on Ethereum. One of the major contributors to Ethereum's current price drop is the security breach at Bybit, which resulted in a massive $1.5 billion exploit. How the hack unfolded. On February 21, attackers compromised one of Bybit's Ethereum cold wallets, which are generally considered more secure due to offline storage. Stolen assets included 401,000 ETH, along with large amounts of staked ETH tokens such as STETH, METH, and CMETH. Blockchain investigators, including ZachXBT, traced the hack to Lazarus Group, a notorious North Korean-backed cybercriminal organization. Crypto analyst Andext suggested that Lazarus Group will eventually liquidate the stolen ETH, adding selling pressure to the market. Bybit CEO Ben Zhu reassured customers that the exchange remains solvent and that all client assets are backed 1:1. To prevent withdrawal issues, Bybit secured a bridge loan covering 80% of the stolen funds. While Bybit's actions have mitigated some immediate risks, the massive hack has triggered uncertainty in the Ethereum ecosystem, leading to an increase in selling activity. Ethereum hard fork rumors add to market anxiety. The Bybit exploit has reignited discussions about Ethereum's ability to reverse blockchain transactions through a hard fork, similar to what happened after the 2016 DAO hack. Some prominent figures in the crypto space have publicly called for Ethereum to consider a rollback to prevent the stolen ETH from being used by Lazarus Group, who is calling for a hard fork. Matthew R. Crater, a financial analyst, argued that if Ethereum does not roll back the hack, it should be held responsible for indirectly financing global terrorism. Arthur Hayes, co-founder of BitMEX, openly asked Ethereum co-founder Vitalik Buterin if he would support a rollback to recover the stolen funds. Will Reeves, CEO of FoldApp, stated that Ethereum's ability to reverse transactions could be a critical feature that helps maintain trust in the ecosystem. The Ethereum Foundation has not officially commented on the matter, but rumors suggest a potential community vote on whether Ethereum should reverse the transactions. Why this could hurt Ethereum's credibility. A rollback like this would echo the 2016 DAO hack, when Ethereum split into ETH and Ethereum Classic, etc., after a controversial chain reversal. If Ethereum developers approve a hard fork, it could undermine Ethereum's credibility as an immutable blockchain, set a dangerous precedent where future hacks could lead to more rollbacks, discourage institutional adoption, as financial institutions rely on uncorruptible blockchain history. With uncertainty surrounding the potential rollback, traders have responded by offloading ETH holdings, adding more downward pressure on price. Ethereum could drop another 28% if bearish pattern holds. Beyond the Bybit hack and hard fork concerns, Ethereum's price chart is forming a bear pennant pattern, suggesting a potential drop to $1,950 in the coming weeks. What is a bear pennant? A bear pennant consists of a steep decline, flagpole, which ETH already experienced in early February. Sideways consolidation, pennant formation, which ETH is currently in. A potential breakdown continuation, leading to a further decline. If the bear pennant pattern plays out, technical analysis suggests a 28% drop from current levels, placing Ethereum's next major support around $1,950 by early March. Key technical indicators. ETH failed to break decisively above the pennant's upper boundary, indicating that sellers remain in control. The Relative Strength Index, RSI, at 48.06 suggests neutral to bearish momentum, meaning there is room for further downside if RSI falls below 40. A confirmed breakdown below $2,600 could accelerate selling pressure, pushing ETH toward $2,200 first, before testing the $1,950 target. Will Ethereum recover, or is a deeper drop coming? With ETH price now caught between bearish technicals, a security breach, and regulatory uncertainty, the coming days will be crucial. Could Ethereum manage to hold above key support levels, or will selling pressure push it below $2,500, setting the stage for a further decline? 1, 2, 3.